Hello traders, I'm Luke from Disciplined Trader. This is the first video in the Trading Basics series, and in this one I want to introduce you to candlesticks. I'm going to explain everything from what they are to how they form. So, candlesticks are the most commonly used method of displaying the price movement of a market on a chart. Each candlestick chart will have a time scale on the horizontal axis, and it will have a price scale on the vertical axis. Each candlestick chart that you will see displays candles in a particular time interval. These intervals can be anything, such as 5 minutes, 1 hour, 4 hours, 1 day, 1 week, etc. So for example, here we are looking at a 5-minute chart. So this means that each candle takes 5 minutes to form and represents 5 minutes of price action. Price action simply refers to the movement of price. So how do candles show us where the price has moved? Let's take a closer look at a candle. The first thing to know about a candle is its colour. We call a green candle a bullish candle, as this signals that the price has moved up overall during the time period it represents. We call a red candle a bearish candle, as this signals that the price has moved down overall in the time period it represents. Candlesticks also quickly show us 4 important pieces of information about the price movement they represent. They show us the opening price, the highest price it reached, the lowest price it reached, and the closing price for the time period that the candle represents. They show us this information through the 2 components that make up each candle, the candle body and the candle wicks. The body is the thick coloured part of a candle, and the wicks are the thin lines coming from the top and bottom. If the body is green in colour, so a bullish candle, then the base of the body shows the price the candle opened at the start of the time period that the candle represents. The top of the body shows the price that the candle closed at. The bottom of the lower wick shows the lowest price the price reached, and the top of the upper wick shows the highest price the price reached during the candle's time period. When looking at a red candle, so a bearish candle, the upper and lower wicks show us the same information as before, but this time the top of the body shows us the price the candle opened at, and the bottom of the body shows us the price the candle closed at. This is because overall a bearish candle moves down over the time period. So let's look at an example of how one of these candles may form. So first the candle opens, then it moves down, so now we have a red body. Then it moves back to the price it opened at, so we are left with just a lower wick. Now it moves up, and so a green body is formed. The price then falls a little again, but not quite to the opening price, so we are left with a small green body with a wick to the top and bottom of the candle. Now the price drops further to the original opening price and leaves us with just an upper and lower wick with no body. Finally, the candle moves down slightly and closes at this price. The resulting candle has a small red body, as overall the price moved down slightly from the price that the candle opened at. We also have an upper and lower wick to show the highest and lowest price the price action reached during the candle's time period. The next candle opens at the price the previous candle closed at, and the price continues to fluctuate in this manner. As you may have spotted from the previous example, it is possible for a candle to form with a very small body or no body at all. We call these candles doji candles. These candles form when the opening price and the closing price are very close together or happen at the same price. Lastly, I just want to explain that there are alternative methods of displaying price movements on a chart other than candlesticks. Within most charting platforms are methods such as line charts, Renko charts, range charts, Heikin-Ashi charts, among others. These charts display the price movement in a different way to candlestick charts, which can have its uses for certain trading strategies, although the vast majority of traders use candlestick charts. If you are new to trading, I would recommend sticking with candlestick charts, as this is the de facto method for the majority of traders, and it is still the method that I use today. I hope you have found this video useful. Thank you very much for watching. If you enjoyed the video, please feel free to drop a like on it. If you have any questions or want me to cover any other topics in future videos, please let me know in the comments below. Also, subscribe to the channel for more videos like this one. I will be continuing this Trading Basics series to provide new traders with all the knowledge they need to get started. Thank you again, and I hope you all have a good trading week.